Hey, this is John Bartlett with Brentwood Growth. Hope everyone is doing well today. I'm very excited about this conversation. I've got Christopher Malloy, who's the founder and CEO of Top to Bottom Business Solutions, and Gretchen Johnson, who's a business consultant with Chris. We're going to talk about bookkeeping. We're going to talk about record keeping. These are all the critical foundations that every business owner needs to have, and a lot of business owners struggle with this. And so I'm excited about getting these guys expertise in terms of how owners can manage the process better and some alternatives that they might use to potentially outsource some of these functions and free up some bandwidth within their team. Christopher and Gretchen, how are you guys doing today? Well, thank you for being here. Where are you located?
We are in the Charlotte area of the Carolinas, right on the border between North and South.
And Christopher, you're there also?
Yep, same. We're in the South Charlotte, Fort Mill area. Yep.
Cool. Well, before we talk about the specifics here, tell us briefly about the businesses, the service offering, what the history of the firm is, what your client base typically looks like. Give us a background. Give us an overview.
Perfect. Yeah. So started the business in 2017 after working for another company doing similar work for 5 or 6 years. Started with a small collection of companies in the greater Charlotte area. And we do bookkeeping and payroll for small to medium-sized companies. And that can be anywhere from quarterly or monthly recurring bookkeeping after the fact, all the way up to billing, AR, and everything in between.
Got it. Well, let's start with the basics. Tell us the difference between a bookkeeper, a controller, what a CPA, what an accountant does, what a CFO does. Explain the differences between those functions and where you guys potentially fit into those 4 different categories.
Yeah, that's a great question. I think a lot of people, when they hear the word accountant, they group all of those into one thing. And sometimes not. But there's definitely a lot of confusion out there for a typical business owner on where they fall. So when I look at those 4 different roles on a linear scale, you have a CPA, an tax accountant, could be an enrolled agent. Their job is to take what, from my perspective, what a bookkeeper, a controller, and to some parts a CFO, the work they do on the regular month-to-month accounting, and create a tax strategy around, and handle their end-of-year tax preparation. So they're working with the results that you get from the other 3. A CFO would fall all the way on the right side of this scale that I'm driving. So CPAs on a tax prep preparers on their own scale. A CFO is going to be all the way to the right. A CFO looks into the future, does analysis of where you're at today, how you price things, where you're spending your money, and can build models around, if you do this will be this could be the likely outcome.
Right.
Along with budgeting, forecasting, etc. In the middle of the linear of that scale would be a controller, right? A controller, the reason a controller is above a bookkeeper in theory is because a controller makes payment decisions, right? They have their own bank access. They can make spending and purchasing decisions. They're assisting, if the company's large enough, with the CFO. They may be doing the month-end close process, right? They may be putting some of the numbers into the formulas for a CFO. They're kind of an in-between. And then a bookkeeper, which is where we fall, we take everything you're doing and we get it into the books. We close the books every month. We reconcile the accounts. We manage the loan. an interest split, principal and interest split, et cetera, that gives the controller and the CFO really good data to look at.
Anything to add to that, Gretchen?
I don't think so. We often refer to it as the accounting umbrella. There's a lot to the term accountant, so I think the description Christopher gave was fantastic.
So they're really separate functions. Now, how many clients are you guys currently working with? It's a big number, right?
Yeah, we're north of 1,300
Oh, wow.
clients across the U.S. and a handful in Canada as well. Some of our relationships have taken us abroad for sure.
And so when a potential client comes to you, what are the challenge? How are they managing the process currently? What are the challenges that they're faced with, and how are you guys able to address those challenges?
Yeah, it's a great question. I mean, we tend to come across the majority of our clients when they're in a moment of need, right? The owner is wearing too many hats in the accounting side of their business. They're not maybe doing what the things they should be doing in their business, or they've had a bookkeeper for a long time that's retired, or they've come across that their books are way behind and messed up, right? The processes haven't been sound. So a lot of the work that we do on the front end, John, is to figure out, do a process evaluation on how they're doing their books. Is it, how many different programs do you have interacting with your customers? How do they feed your accounting equation? How are you spending money? Do you have credit cards? Do you have a bill pay account? Do all your technicians have cards? All of that we kind of map out in a process map, and then we figure out the most efficient way to give you your clean books. But 9 times out of 10, the clients come to us in need. They're behind, books are messed up, can't find anybody to help them, or business owners wearing too many hats.
Let's talk about some of the common mistakes that business owners are making when they come to you in terms of their bookkeeping functions. And let me take these and sort of break them into different categories. Let's talk about maybe mistakes they're making in how they're thinking about what their revenue segments are. Let's talk about mistakes that they're making maybe in the how they're categorizing their cost of goods, how they're categorizing their SG&A, how they're looking at their net income. Let's start with revenue mistakes first. What are some of the common mistakes that you guys are finding business owners are making in terms of how they're thinking about what their revenue segments are?
Yeah, another really good question. I think that we usually don't find on a regular basis the middle ground when it comes to revenue segmentation, right? It's either too many. I've got way too many income categories in my financials. Things that are less than 5% of your revenue annually, or we see it all. You pick up. You go to work for a landscaping company. It just says landscaping service, and $10 million of revenue in one line. My general rule of thumb that I would coach somebody on is over 5 to 7% of revenue probably needs its own line, and generally you can subcategorize them too. Like you could take your services or your products, for instance. If the landscaping company, they may do 80% of their revenue in services, but that might be split into local, residential, commercial, and then you have projects that you would do as well outside of one-off kind of thing. So probably it's either not enough or it's too much, and there needs to be like a happy medium with some guardrails.
So you're saying if they think about the revenue segments properly in terms of service lines, let's say any segment that represents, say, more than 7% of the total revenue, there needs to be a separate segment that they're categorizing within their P&L, as it were, right?
Yes, I I'd aim for that with likely a cost of goods account to match anything that that's got significant enough amount of revenue.
Okay, cost of goods.
Mhm.
What are common mistakes that you see owners making in terms of how they're categorizing their cost of goods?
Yeah, this one kind of trickles down from a CFO and CPA, and sometimes they have conflicting views, right? So as a bookkeeper, I if I put 20 large service companies that we do work for side by side, some of them are going to want their labor in cost of goods,
Mm-hmm.
at least their technician labor.
Mm-hmm.
Some of them aren't, right? So just the theme here is not a consistent like model for how it's done. Um, your cost of goods should be direct expenses versus the revenue that you do, right? Because I sold this many dollars, I'm going to have this much in expense. In theory, that's what cost of goods is. So again, having a clear plan for what needs to be used as a cost of good account is important. But a lot of times that cost of goods account is probably the biggest fix it category we have to work on when we bring in a new company, right? Because they're like, well, I've just always thought that this would go here. And then we talk through it. They're like, oh, actually, I don't want that there, but I also want to bring my technician labor up because I wouldn't have that without the service revenue.
But there might be situations for smaller companies, let's say, where you've got employees and it might be the owner where a part of their time is spent in the back office running the business and part of their time is actually out in the field, actually overseeing jobs or actually, driving a truck, turning a wrench, doing work
Sure.
in the field. So, in a situation like that, would you take that compensation for that particular employee that might be the owner, and would a portion of that be allocated in COGS and a portion of that be allocated in SG&A? Is that the right way to do it?
Yeah. So absolutely. Yeah. If you have an owner or a high level team member, salesperson, maybe
Right.
they're doing 50% of their time in the field, 50% of their time doing sales. We see it all the time. You absolutely can and should split them appropriately. And it's a
Mhm.
pretty simple accounting entry to make that happen. Where the issue runs typically is on the front end, how it's being tracked
Mhm.
internally to the business, right? So how do I, my sales guy was on the ground 25 hours last week at these 6 jobs, and then he spent 15 hours selling and had these commissions. It's to the job costing level, if the company utilizes that feature in
Mhm.
their business for
Mhm.
reporting, how are you tracking what they were doing in the time they were in sales? That's how we can take the accounting entry for payroll and spread it accordingly.
What are some other SG&A mistakes that you see companies making?
Um, One of the biggest ones is company just creating a new account for every expense.
Mhm.
It's not necessary. It makes it much more challenging to do accounting, and you know a tax preparer buckets a lot of expenses into certain things based on you know what how much or what percentage of that can be written off. So a lot of that stuff they don't even pay attention to. So it's really just a managerial accounting thing to limit the amount of expense accounts you have to where it makes sense. You don't need, for instance, you don't need. Um, I was just looking at somebody's books yesterday or on Friday. Large service company, they've got like 7 meal accounts
Right.
on their P&L,
Right.
right? No need, no need for something that dramatic. And then it's just consistency. One of the biggest things that needs to happen in any company's set of books is that they should always assign a vendor to every expense. It's so simple. The tools usually almost do it for you, but you would be surprised, John, how many times like I look at a new set of books with a company that's been open for years, and I go to look at Lowe's Home Improvement, and there are 200 entries in there a year into that vendor account, none of them, half of them or none of them have vendor assigned, which means you can't run specific reporting
Right.
to look at it.
Right. Right. Working down the P&L, we get to net income.
Mhm.
Now, let's be real. Everybody hates to pay taxes.
Yeah.
And, the lines between business accounts and personal accounts can get a little bit blurred sometimes. What are you seeing in terms of owners running personal expenses through the business? What do you see in terms of owners paying themselves a true market rate salary? What are the common mistakes that people do, and how should this be adjusted for from in order for them to properly track what the profitability of the business is?
Yeah, great question. I mean, I think the first thing is that, business owners need to make sure they're very in tune with their books, right? There's a difference between profitability and cash flow, and a lot of business owners don't understand the difference between them. And so, a couple of tips I would give. The first one would be make sure, especially for companies that have debt, which most do in some form or fashion, interest and principal need to be split out, right? Principal goes on your balance sheet, interest goes on your P&L. Both affect your cash flow, right? Doesn't matter if it's a SBA loan, a loan to your parents, a car loan, equipment loans, any of that stuff. A lease is an expense, right? A leased item is an expense. So that would be two of the quickest ones. We, knock on wood, don't have a tremendous amount of people running personal expenses that aren't business related through their books. And we try to deter people from cross using accounts. So swiping their personal card and then having to do an expense report. That's something we work really hard on back on the process map, because we can only work with what we see that comes into the bank accounts, right? That's coming through the account. So outside of that, I would just say be extremely cognizant of reviewing your books every month. Just because somebody's closing them and sending you numbers, I scan through our ledger every single month, and many of our clients, we do a line by line review, looking for anomalies and potential errors that come up.
I want to come back to closing the books, but before I do, we've talked about the P&L. We haven't talked a lot about the cash flow statements, nor have we talked a lot about the balance sheet. Talk a little bit about the cash flow statements and talk a little bit about the balance sheet.
Yeah, I mean, I would argue that the balance sheet is likely equally as important to be picked through and reviewed as the income statement or the P&L, depending on your words. Once you have both of those things that you're happy with, and you're content, not necessarily maybe with your profitability, but just with how they're structured and that the information is accurate. From there, you have 2/3 of what you need to do a cash flow review, right? If you're a cash-based business, then you need to have projections, right? Revenue projections and expense projections to come up with cash flow. If you're an accrual-based business or run your financials based on accrual, you'll need the same expense projections, but you'll be using your AR and predicted how much of your AR you're going to be able to collect to come up with your cash flow. So that's where you kind of edge into that controller space, right? Go from a bookkeeper. If you're just cash basis, it's pretty straightforward. If it's accrual based, you're having to make some different kinds of estimates on, how much of our AR do we stay behind, right? What's our collection time turnaround? So the three of those reports together, so income statement or P&L and balance sheet, along with some forecasting, different kinds of forecasting, can bring you your cash flow statement. They should be anybody who will listen to me, I'd say that your P&L you should be looking at every week. Your balance sheet you'd be looking at twice a month, and at the same time you're talking about cash flow, especially if you're a cash dependent, very tight run financial company.
Let me come back to what you said. You should be looking at your P&L how often?
Every single week.
You should be looking at your cash flow statement how often?
Every at least twice a month.
You should be looking at your balance sheet how often?
At least twice a month.
You got 1,400 clients, you said, right?
Yep.
How many of these business owners out of 1,400 are actually looking at the financials at that frequency as they should? Not as many as should?
Well, I'd say not as many as should, but the larger the company, the more frequently they're looking at it. For a micro company that's doing, 200,000 a year, I'm just using that as a term, it's not as important. Because a lot of times their data is not getting updated frequently enough to look at it. But for a company that's over 2 million, absolutely, especially when it's growing.
Right. You mentioned cash versus accrual. What businesses is it appropriate to be running their numbers just on a cash basis, and what businesses need to be running their numbers on an accrual basis?
Yeah, I mean, if your company has, I'm going to use the word significant loosely because in different industries it vary. If you've got a lot of AR or a lot of AP, like if you're constantly trailing, 30 to 45 days with vendors before you pay them, and adversely on the AR, you're not billing and taking money right away. All right. So let's use a landscape. I keep going back to a landscaping company because the easy service business. If you're a landscaping company that every time you do a job, you take your money, like you have an ACH agreement or a billing agreement, and you just pull the money, you're probably in a better spot to do cash, right? If you're a restaurant, you have sales at your POS system every day, you close out, money gets deposited, your cash. You're not going to put in a bill just to recognize income that's coming the day after, right? So those would be two significant differences. Anybody who's got payables and receivables that are due 15, 30, 45 days out, you almost don't have a choice.
So let's say you're $1 million business, might be an HVAC business, might be a roofing business, might be a landscaping business, might be a pool service business, whatever. Is there a percent in terms of, and let's forget about the payables for a moment. Let's just talk about the receivables. Like if you're $1 million business and your receivables are over a certain percent of your sales, let's say they're over 10% or 20%. What's a good rule of thumb to say if your receivables are this much of your revenue, you should really be running your books on an accrual basis?
I would say any. I don't have a percentage for you, but I would say any company in those service businesses that you mentioned that's doing over $1 million. Most all of them should be accrual unless you are pulling money at the time of service. Like I strongly suggest that anybody that does recurring service work, or you have clients that you stay with for, like a landscaping company, you may not have a contract with them, but you work on the BB&T or the Truist, you do these branches every month. If there's a way to have an auto payment agreement so that you can pull your money, there is so much time, effort, money lost chasing after past due revenue. And a lot of these companies, in most cases, can convert a lot of that AR to pay on demand. Like we're going to hit your account 15 days after, and we're going to pull the money, and you could take some of that work out.
Got it. Makes sense. Closing the books. What What's the time period in the following month that you would like to see the previous month's books closed at? What are we shooting for?
Yeah, larger company or faster, right? So the bigger the company, the more revenue expenses, the closer to the 5th to 7th that you're going to want to have everything closed out.
5th to 7th of the following month.
Yes.
Okay.
Yep. Smaller the company, it fades back to the 10th, the 12th, the 15th. Even can slide back to the end of the month depending on how small the business is. But you've got to take that into account. When do your bank and credit card statements come out, right? What is the current processes in your accounting team for how you manage the month end close? You got to make sure all of that matches up with, can we deliver this by the 5th or by the 7th, whatever date that you've set. We've got clients all over the board.
You've got 1,400 clients. Give me a rough sort of sample size. When they came to you, when were they closing their books? And after having worked with you for a couple of months, what were you able to move that closing date up to?
Yeah, great question. I mean, I would argue, being that a lot of the clients we get to are behind in some facet, just met with a client, again, a prospective client in the middle of last week. They're like 5 months behind with their current solution.
Sure.
So their close from 5 months ago still hasn't happened. So they're actually like almost a half a year past due.
That's
right?
crazy. That's crazy.
It is. And John, always comes back to, in our estimation, always comes back to process. If we're signing a larger company and they're like, hey, we really want to find a way to get this done on the 10th, then that's what we're going to deliver. We're going to learn the business, figure out the processes that are needed. And if there are issues, for instance, we don't get this bill till this date and this has to go in last month, then we try to help them work with the vendor to shorten that cycle. Because a lot of times it's not even things that are inside of their control. It could be, this is when we get our sweep from this client's payment, or
Right.
this is when our CRM updates. I mean, there's a litany of technological things that can cause it to be behind as well.
Most people right now, they're managing their bookkeeping internally. What are the advantages to considering outsourcing the bookkeeping functions?
Yeah, great question. So one would be consistent account management, and
Mm-hmm.
that's a very easy term to use. But the way that we've structured our business is in pods inside of our company that work on different kinds of companies. So if we've got 3 or 4 people in a pod, you may have one staff accountant that handles your work, but if they're on vacation or they get promoted or they leave the organization, it's an easy handoff. When you lose somebody inside of your business and you have to replace them, it's typically not an easy handoff, right? Somebody else has got to take on extra work until you can find somebody, get them in and train them, hoping that they're going to do a good job for you. Also, you get the other benefit would be you're going to get multiple people in our organization, or a good bookkeeping firm, not just us, is going to run through the same kind of process mapping. And the goal is to make accounting easier for the entire organization, and then figure out who's going to do what and save money along the way. There should absolutely be a money savings from outsourcing your accounting.
What are the concerns that business owners have about outsourcing bookkeeping?
Who's doing my work, right? That's one. Number 2 would be safety and security of bank access, of loan access. That would be another. And then the third, I think that the one that I see the most, especially for companies who are established, is, well, it's always just been done this way. It's very hard to get over that. Well, they're in the office beside me. How come we can't Like, I'm just so used to, having somebody right here that I can just walk in the office and talk to. And if you want to save money and you want to have some of those other things, it's not possible to outsource it. So it's a change. It's different, but especially for a company that's getting larger, has passed that 1 million and they're moving up. Having more than one entity involved in the production and review of your financials is important, because it's a checks and balances against the work that's getting done. If you've got a controller that's reviewing your work in-house, making your bill payments, and then you've got an outsourced bookkeeping company that is doing work for you underneath, the controller every month is reviewing what's happening, and there's a good flow of feedback that happens. Sometimes you lose that in an office, right? Because, well, they're my friend. I'm not going to give that kind of feedback. I'm just going to go fix it. And then, you don't know what you don't know.
There's a people component to this, there's a process component to this, and there's a cost component to this. Let's talk about the cost component. When an owner looks at what their internal cost is based upon however they're managing the bookkeeping function, and look at, well, if I outsource it to a firm like yours, I'm going to have to write a check to this guy over here to do this. How do they justify in their mind the additional cost that the business is going to have to absorb?
Yeah, I mean, good question. I would actually look at it in the opposite way. When you hire a team member that's going to come work in the office with you, they've got to have a desk, they've got to have a computer, they've got to have a phone. I hope that you've got some kind of security on your machines and your system. You're going to have to pay for that. They're going to need uniforms. They're going to need all kinds of things to be a part of the business. You've got to pay taxes on their pay. I mean, there's a whole lot of other expenses that come with an employee. For us, I'm gonna figure out the scope. I'm going to figure out the time it's going to take to work on the account and the level of work it's going to take to produce, how many team members I'm going to need to be involved, and you're just going to get one flat monthly fee, right? And that's going to be it. So if you couple that with the efficiencies that we hope to bring to every client's process, there should be a significant savings.
Okay, so let's talk about the people piece of it. So, if you have a bookkeeper that's retiring and you've got to figure out who's going to do this, that's sort of an easier conversation. If you've got if you have a bookkeeper or you have someone that is providing the bookkeeping functions and you're talking about moving these responsibilities away from that person, how do you handle that conversation?
Yeah, I guess the follow up to that would be, what's the reason that you're looking in the first place, right? So if you're looking for a bookkeeping solution, it's likely one of three things. Your bookkeeping resource that you currently have is leaving or gone. You have a bookkeeping resource, but you're not happy with what's happening in your books. Or third, you believe your bookkeeping's in good order, but you need more of this team member somewhere else in your business. They're so good. I need them to do these things for me, and they're not happy in their role because they feel like they're being overworked, right? That is usually one of the three reasons somebody would reach out. And I think they're all three very different conversations about how to support it. And so our goal is not to come in and get people out of the way. Our goal is to figure out what's not working, figure out the state of your books, come up with a game plan to get the books right? Not only the P&L and the balance sheet, but also the chart of accounts. We talked a lot about, revenue segmentation and how do these programs interact with your books, and then come up with, here's what, in order for you to get a perfect month-end close, Here's what the things that need to happen throughout the month. How do we split these up? What is he or she going to keep? What are we going to do? How are we going to tie a bow on at the end of the month so that how do we communicate together? You're used to walking in the office and talking to your bookkeeper. Now she's going to be doing something else in the business. How do you communicate with us? All of that is in that initial, debrief.
When people hear about outsourcing, one of the thoughts that pops in our head is call centers that are offshore, they're in another country, and there's a security issue, there's a communication issue, there's a culture issue. And so outsourcing and offshoring are sort of two different things. Is that right?
They absolutely are. It is extremely prevalent in the accounting industry to have both, right?
Have both.
To have outsourcing, which can be anywhere, and offshoring, which is this day and age in the accounting space specifically.
Yeah.
There's a shortage of accounting people at the very top, and it has created a massive inflow of offshoring.
Do you guys offshore? Do you have team members that are outside of the U.S.?
Absolutely. Yeah, I've got 44 team members in the U.S. and I've got 5 team members offshore. And it is something that we are doing and testing, but our offshore team works only on clients that are aware that they're involved, and they have the same, if not better, IT and protection and security that we spend a lot of money on ourselves every month.
Got it. So it is something to consider, but it needs to be managed properly.
Yeah, I definitely have seen situations where somebody, a company in the U.S. that needed help with their books went directly to offshore and had lots of problems, right? Anybody that we ever bring on, even in an offshore role, they are part of our family. They are on our team meetings. They are trained the same way. They work the same hours. They're just another one of us. And so it does give some more protection. But it comes at a cost, right? You can offshore and pay nickels on the dollar and not know what you're getting and probably have some not be able to sleep well at night sometimes. Or you go through a professional company, pay a little more, but know the product that you're paying for.
Got it. Well, Gretchen, I know you've been a part of our fast track program, and we've completed a couple of the fast track series, and we've got our third one that we're going to be launching in several weeks. Talk a little bit about the kind of information for those that are going through the fast track program that you have been able to pass on to them.
Yeah, absolutely. So I would say a lot of it's what we've covered here today. Just really diving into what's the difference between COGS and SG&A. Question that I think I've answered both times is, well, what if I have someone who does labor in both? And what do I do with that? How do I handle that? So I think that's a big part of it. We do spend quite a bit of time talking about net operating income, how you get to that, especially when you're looking at potentially selling your business, getting to that actual bottom line number after adjusting for maybe you're getting paid really well as the owner, and someone coming in might choose to have that be more at a market rate. And then I think the biggest thing that's been beneficial in those fast track conversations is, obviously I talk for a while, but then getting to open it up and have people ask questions, even sometimes bounce ideas off of each other, just because when you get business owners together in the same room, even if they're in wildly different
everyone's dealing with the same stuff.
Exactly. They're all dealing with the I'm 5 months behind. I had a bookkeeper and they're no longer with us. All these things we've talked about, it's similar regardless of what industry you're in.
Well, I thank you so much for being a part of that, and you've done a great job, and we look forward to doing a bunch of more of those. Chris, anything in conclusion here?
No, just wanted to thank you again for giving us the opportunity.
Thank you, man.
To join you.
Yeah, and we'll put your contact details in the show notes, and if anyone wants to reach out to you directly, they can. If they want to talk to us about their bookkeeping and different alternatives of getting those financial foundations set, we're more than happy to have that conversation with them. And we encourage people, if they want to be involved in the Fast Track program, to come be a part of that as well. Well, thank you so much, guys. This has been awesome. We'll talk to you soon. Have a
Perfect.
great day.
Thank you.
Perfect.
Take
Thank
care.
you.
Bye.